Welcome back. In this video, we're going to be taking a look at revenue recognition, which is sometimes referred to as ARM or Advanced Revenue Management, which is really a feature that you can turn on in NetSuite that allows you to do revenue recognition. So you might hear me use ARM and revenue recognition interchangeably. Now, I'm assuming at this point you have seen my earlier videos on amortization and fixed asset management. And as we go through revenue recognition, you'll see a lot of similarities between these different tools. So certain tools that we come across or certain features I might go through very rapidly because I don't want to re-explain some of the things I've already covered. And also keep in mind that I'm not in this video teaching you revenue recognition from an accounting standpoint. I'm assuming that you either understand it from an accounting standpoint or you minimally know how your company uses revenue recognition. So what I'm going to be covering in here is simply how do you use revenue recognition in NetSuite. And if you're going to do that, it's really important to understand what is the kind of structure or the framework that revenue recognition uses for NetSuite and also the terminology that it encompasses. So let's take a look at that. Let's give an example here. Let's say we have customer Joe is going to purchase from our company. So we have a sales order come in, and on that sales order, there are 3 line items. There's widget A, B, and C. So customer Joe is buying these 3 widgets from us, and we have this one sales order. So this process, when we look at it from a revenue recognition standpoint, what's going to happen is that sales order is going to create what's called a revenue arrangement. And you can consider them almost like siblings or like a mirror image. It's going to be a one-to-one relationship where a unique sales order is going to create a unique revenue arrangement for that sales order. Down from the sales order, down from that level, really, you could consider you've got 3 line items, right? There's widget A, widget B, and widget C. On the revenue arrangement side, it's going to have what's called revenue elements. So it's going to have element for widget A, another one for widget B, and another for C. Each element will have what's called a revenue recognition plan, and I'll call it a revenue plan, which is simply basically, it's that schedule of how the revenue is going to be recognized, very similar to an amortization schedule or a depreciation schedule. And so it might be over a time period, it might be certain events cause the revenue to be recognized. Whatever that is going to be included in that plan. And that plan, there's going to be one plan for each revenue element. So widget A might have its plan for how the revenue gets recognized, widget B will have a different one, etc. Now, the question at this point is, how do we know what plan to apply for each element? The way that gets dictated, and the missing piece here, is what's called a revenue recognition rule. And the rule, you really can consider that like a template. You're only going to have probably a handful of them, and they'll apply to all circumstances. And the way this gets applied is the revenue recognition rule is actually attached to the item itself. So for example, widget A, that is an item that we will have an item record for, and on that record, it will say what the rule is. So widget A might have one rule, B might have a totally different rule, and C might have a third one. So as you have these line items on any sales order, that line item will create its mirror image element. And the element will know, okay, this is the rule that should be applied because we're talking about widget A. So widget A always uses this rule. So I'm going to create the plan based on that rule. Now, before I actually dive into NetSuite, I do want to say, if you're finding this video helpful, please hit the like button. And also, at this point, I'm coming out with videos twice a week. So even if you only have a few requirements from NetSuite, I guarantee you at some point, I'm going to make a video that's going to be helpful for you. So subscribe and at least be aware of the videos that I'm coming out with. And also, if you do want to know more about something, let me know down in the comments below, or even just reach out to me and say hi. It means a lot to me to have an actual interaction with my audience. So with that, let's get into this. So I'm here in the home dashboard in the controller role. Now, we want to take a look at everything that we just described. So the first thing we're going to look at is the sales order, because that's really the beginning of this process for revenue recognition. And I have a sales order pulled up here. So I'll click on this. So we're on this sales order with Jupiter Technology. And if I scroll down here, you can see we've got a number of different line items included in this sales order. So we can see them all lined up here. And if we want to take a look at the revenue arrangement that was created to go along with this sales order, we're going to come over here to related records. And you'll see on this tab in the sublist related records, you'll see right here, we've got the revenue arrangement. We can see that it was approved, and we can actually click on this date, and that hyperlink will actually bring us to the revenue arrangement record. So I'm going to click on that. And you can see this is tied to Jupyter Technology. It's got some header level information. And if we scroll down, just like the sales order has all these line items, the revenue arrangement has all these revenue elements, and we can see them here. So we can see the item that that's from, we can see the sales order it came from, the date, the number of units that were included for that revenue element, the amounts, all of these different things. So all that information is included below. And if we come back up to the top here, we can see this button here, View Revenue Plans. So if we click on that, it will provide us all the revenue plans for every single one of these elements. So it's the exact same amount, which you'll see here. Every single one of those elements has its own plan. And again, you can take a look at this and just get familiar with it. It's got all the basic information like the customer, the sales order, all of these different things. So let's take a look at one of these plans so we can actually see what they look like. And you'll see this column here, revenue plan number. These are actually hyperlinks. So I can click on this and it will open up that particular plan. So that plan is tied to a particular revenue element, and we can look at what the plan is doing. And we've got some basic header information at the top, but what's important is if I scroll down, this is basically the schedule, like I pointed out earlier, just like an amortization or a depreciation schedule. This is the schedule for the revenue to be recognized. And so you can see we've got the dates or the periods really on the far left. We can see the amount for each month that is going to be recognized, as well as you can see the actual journal entry. So if you click on any one of these hyperlinks, it'll actually take you to the journal entry that recognized this revenue. You can see the accounts that are related, the percentage of the total that's been recognized so far. So all the basic information included here for this particular revenue plan. And remember, this revenue plan is tied back to a revenue recognition rule. The rule is what caused this plan to occur, where it's broken down over all these months with these various percentages. So how do we take a look at the rule? We can actually come up here and we can see this is the item that basically had this generated from. So if we open this record, so you can see here that we've got this pretty unintelligible name for this non-inventory item, and we're on the record itself. And if I come down here, we've got a subtab, revenue recognition amortization. So if I click on that, notice right down here, revenue recognition rule, and also revenue recognition forecast rule. So just to understand what the difference is between an actual revenue recognition rule and a forecast rule, the forecast rules are used pretty much just for project management, and they're not actually having a GL impact. The forecast rules are used basically forecast for that project as the periods come along and certain milestones are hit, etc. What is the revenue recognition going to look like for that project moving forward? So you can have an actual rule as well as that forecast rule if it's relevant for any projects that you're using, etc. So in this case, we can see the revenue recognition rule right down here is called even periods prorate. So instead of clicking on this particular one, I just want to pull you to where you can look at all the revenue recognition rules. If we come up to the revenue tab at the top here, we're going to come down to non-transaction, and you can see right here, view revenue recognition rules. So I'm going to click on that. And it brings me to this list of all the rules that we have, which it looks like we have about 10. You can see that up here. So as I pointed out earlier, these are like templates. So you only have a handful of them that get applied in all circumstances. So I could click on one of these and show you really what goes into a rule, but it's probably best to make a blank rule just so I can explain all the different fields. So we're on this revenue recognition rule. And again, this is going to look pretty similar to when you set up amortization templates as well as FAM asset types. A lot of the same fields. So for example, you of course name what the rule is going to be. You're going to set the recognition method. Straight line is very commonly used, but not always. There's definitely instances where another recognition method is warranted. And then we get to this recognition period. So there's really a few things I need to orient you to here. So we've got recognition period. We also have, notice we have the term in months and days over here. And we also have the start date over here and the end date over here. So a few different things that we're looking at. And really what you need to understand is, do you want to be recognizing this revenue based on just a generic period? Let's say the period is March. Or do you want to do it based on when the actual, let's say the transaction occurs? So the sales order comes in. That sales order didn't just come in March. It might have come in on the 10th of March. So do you want to start having this revenue recognition be based on the fact that the 10th of March to the 10th of April? Or do you want it to go March and then straight to April and then straight to May and not have really a consideration of days or exact time periods? All of these different fields I just pointed out, the way that you're going to use them together is going to dictate how you want that revenue recognition to occur. So for example, right now, the recognition period is blank. You can't put any information into it. But if I come over to the revenue recognition end date and I change that to recognition period, notice by selecting that, I now have this recognition period available here. So you can always take a look at the field help just to fully firm up for yourself when you're going to use one setting over another. But just understand these things all tie into each other. All of that can be filled in through those fields. Then we have period offset and start offset. I did describe those at length in the fixed asset management video, so I'm not going to go into a great amount of detail, but just understand they're both basically pushing forward that revenue recognition date so that instead of starting immediately, they might start in 1, 2, 3 months, whatever you set. Similarly, the initial amount, that's whatever that first revenue recognition period is going to be. You can set that if it's going to be different than, let's say, the straight line across all periods. I've already covered the terms. And then amount source. This is an interesting one. There's actually a few different things that are influenced by what your amount source is set at. And there's a Sweet Answers article that really goes into detail in terms of what this thing is influencing. But the most important aspect of this is really at what point are we generating the revenue plan? Right? You've got the revenue arrangement, and I'll get into how that gets created in a second. But the revenue arrangement then has elements. Those elements, based on rules, create the plan. So it's kind of like, when does that plan get generated? And based on what you set here, it will actually dictate how that gets generated. So these are all event percent based on something, right? Event based on amount, quantity, complete. So the first one, based on amount, is basically saying that when the revenue arrangement is made, or potentially when the billing occurs, then the plan will be generated. As opposed to based on quantity, that means that when the item is fulfilled or the sales order is fulfilled, that's when the plan is going to be generated. So depending on how your business runs and how you fulfill items, billing, etc., and recognize revenue, you might want it to be on the fulfillment, or you might want it to be generating the plan based on the billing. So you can select one of those two. And the third option, event percent complete, is really for projects. If you're using revenue recognition for project billing, then you'd want to select the event percent complete. And then this end date change impact, as well as the reforecast, really what these things are dictating is if you make any modifications to the revenue recognition, is that going to happen only for, let's say, one period, or do you want that to ripple out over all remaining periods? And that's either for the revenue recognition itself, or if you're doing any kind of reforecasting, how is that going to influence any changes made? So that's how a revenue recognition rule works. Now, I want to show you a couple settings in terms of when a revenue arrangement actually gets created. I know I said that it gets created with a sales order, but it's not quite as simple as that. So let's come up here to Setup. We're going to go down to Accounting, and then over here we have Accounting Preferences. So we'll click on that. And if we go to our Accounting Preferences, just on the general subtab here, if I scroll quite a ways down, we come to this Advanced Revenue Management Only. Remember, I talked about ARM. So these two fields right here, Revenue Arrangement Update Frequency and Revenue Plan Update Frequency. This is basically where we're stating whether this thing will happen manually or automatically. Now, most people will select it to be automatic. And what that means is every few hours, any sales orders that have been newly created in the system will have all of those sales orders then generate the revenue arrangements for them. And in most cases, that is fine. A few hours is not a big deal. But if you are having a situation where you want to create a revenue arrangement immediately, or you want to create the revenue plan immediately, if the circumstances are correct, then you can do it manually. So the way you would approach that is you'd come up to the revenue tab here. You'd go to revenue arrangements, update revenue arrangements, and you can do the same thing for plans. So if I click on that, and it'll bring us to this tool, you can see it includes not just revenue arrangements, but you can also update the revenue plans. And what you do is you basically set the time period. So again, if you have it on automatic, this thing will occur very rapidly, but you could set for a very specific time period, or if you have it on manual, you could set it for any date range that you want. You put that information in, you set what record type you're generating this from, and then you come up here and you select either update the arrangements or update the plans, and it would generate that on demand. So everything I've described at this point is really how this structure works. What are the different features? Where do they exist in NetSuite? What do these things mean and how do they work together? But we haven't actually done anything, especially not that has a GL impact. So more importantly, when you're wanting to recognize revenue, you're going to come to probably the end of the month. You're going to want to do a journal entry that actually recognizes the revenue for all of those various revenue plans. So how do you go about doing that? We're going to come up to the tab here with revenue, and we'll go down to revenue recognition journal entries. If I come over here, notice we have the ability to schedule a revenue recognition journal entry where you can set up that, let's say at the beginning of the month or the end of the month, it just automatically creates that journal entry to recognize whatever revenue is needed. You can set parameters for that. That's generally not recommended because instead of setting up a schedule that just runs on autopilot, you generally want to do that manual creation of the journal entry so you are exactly aware of what is being recognized and that it is being handled appropriately. So instead of making the schedule, we're actually going to go to Run Now, which brings us to this tool that allows us to set, you should recognize this at this point because like with amortization and fixed asset management, we're going to set things like the period, the subsidiary. We can set other filters as needed. So let's actually select a period that does have revenue that needs to be recognized. So we're going to go down to, let's say January 2024. So you can see it automatically populated down here all of these revenue arrangements that for that particular period, for the subsidiary US West, has revenue that needs to be recognized. So all we need to do is go up here and create journal entries. Now, if we didn't want to actually recognize for all 5 of these, we could come down to select individual schedules. And if I click on that, it modifies the page so I'm able to make exact selections. But in this case, I don't want to exclude any of these. I want to recognize everything at once. So I've selected them all and I can create journal entries. It brings me to this kind of queue page where I can see what the status is, and all I need to do is hit refresh until this thing is completed. So it looks like we now have the submission is complete. It was 100% done with 0 errors. So we've now recognized revenue successfully for those 5 items. So that's the basic concept of how revenue recognition, or ARM, works in NetSuite. One last thing I want to point out before we end this video is if we come up to revenue and we come down to reports, you've got a number of different reports that are available to you here. Most importantly, we've got the deferred revenue waterfall, which is going to show you for any period selection you want, it's going to show you how that revenue is going to be broken down. So it gives you this great grid report that shows revenue by month, by item, all across this entire range. And it really gives you a good feel for how it's going to start breaking down on a month-to-month basis for your revenue recognition. So make sure you are aware of these reports and taking advantage of them when needed. And that's it for revenue recognition in NetSuite. I'll see you in the next video.